Good morning, it's Harvey Jackson. Just going to get through a few different items. Nothing really earth-shattering after a fairly big day with the interest rates kind of get set in Canada and US. I'm going to show you the Sask numbers, and they're old numbers, but just haven't reported them, and my bad on that, of course. But you can see the crop yields here are lower. You can see 39 bushels to the acre. And that might be right on par from last year as far as numbers. Now, I don't know if it's weighted by production zones, where there's more canola or not. And you can see, as Durham at 38, and there should be some new numbers coming out here very soon, and I'll try to report them on more of a timely basis here as well. Looks like wheat might be a little bit higher than expected as well, but those are the numbers that I'm paying attention to. Even your lentil number is quite large as well. As of the September 8th, and again, that's 10 days ago, what was the percent harvested? You can see that harvested canola was only at 12%, and your spring wheat at 35. Expect those numbers to have moved up quite a bit when we report again. Trump tariffs fund bailout for U.S. farmers, as Secretary Rollins has quoted here. Now, they're looking for some sort of package here soon, but they also have a whole funding bill there too that they need to be in front of. So I don't know which one's going to come first. I think keeping the government funded would be the first priority there that they need to be done. Just choppy trade as the Fed outlook. When you get the forward guidance, what you're looking at for the next rate decreases, doesn't sound like there's going to be any increases, and the dollar actually surged lower and then closed a little bit higher yesterday. To continue on a little bit more of the Russian news, the Russian government explores ways to make ends meet as budget deadline looms. And I've got more than one page here, but they have a value-added tax, and they're moving that value-added tax from 20% to up to 22 expected. Now, again, this is not 100% set in stone because they've got the September 29th as the date that they're going to put this out. But that value-added tax makes up for 37% of the total budget last year. Now, this is where I think it might be more impactful, and maybe just the understanding of the inflation in that country as well, because of the war and everything else that they're doing. The statement here, the bank ability to cut rates further from the current 17% is maybe going to be a little bit difficult, but it doesn't seem like it's going to spur on or help the economy a whole lot with that rate cut. The borrowing by the government is still at 13%. If we had those kind of values, we would definitely be in a lot of trouble. And we already are with our lower prices of our commodities. Here I'm showing palm oil versus your European rapeseed and the Chinese rapeseed as well. So palm oil, and I'm just here, this is basically Europe pricing products, and the palm oil has actually had a pretty good increase, and I'm trying to use the same reference back into January, basically. So you've got a 6.4% increase of palm oil and a 3 or almost 4% decrease in your European rapeseed, but you have a 7.3% in Chinese rapeseed. This is the North America products, and it's comparing your soybean oil rise since that similar kind of timeline. And it's 22%, and your canola is 10%, and your soybeans are basically at 3. So let's just have a quick look at the weather. Long range ridge seems to be building in here. Slight shifts from the last forecast, so forecasts change every 6 hours. That bullseye of moisture is still sitting over the Dakotas, and seem to be rolling there. Now, when you look at what's going to happen in the next couple of days as a forecast, you can see that Manitoba is going to get another little hit of rain in there. This is just a longer range of the systems rolling across, comparing the GFS to the European. I think we want the European, we're not the GFS, for the fact that it looks like it's going to stay open for a little bit longer. And here I just and the the GFS, and it shows those rains. So we're hoping the European model is more correct this time than the GFS one. Canola just slightly up, basically unchanged, right at 6.29. European rapeseed is up $1.25 per ton at 4.72. Soybean oil down a third of a cent at 51.50. And we'll just skip ahead here. Soybeans down 3 2/3, and wheat is basically just down a penny on the spring wheats, and your hard red and your Chicago wheats are up 1 to 2.5 cents. Here's canola. You can see this little wave that we've done here. Red day yesterday. Today we're still holding on to a little bit of green when I took the snapshot of this chart. Here's your European rapeseed, and I left this channel in, but short-term moving averages seem to be put a lid on any move outside of that range that I had in there, that channel going down. So if we can hold and break through, that would actually help canola as well. When we look at the price differential from European rapeseed priced in Canadian dollars, it's sitting just shy of 140, but 139.60 is the differential between European rapeseed and canola. And the higher this number, the more likely that canola could find its way into Europe and other partners as well. Soybean oil futures still chopping a bit sideways here to down. Your soybean futures actually holding up better than soybean oil futures, but a couple of down days here that we've seen. Crude palm oil is almost trying to break through this trend line that I've got put up here, but they are hovering around the top end of these higher values that it's had. Crude oil, a big nothing sandwich still yet, and your Canadian dollar had increased, and then it's looked like it's pulling back off of those values. And this is where the US dollar had a big move the day before, and then fairly big range, traded down quite a bit, all the way down into 96 on the US dollar index, but closed up higher. Let's have a quick look at the spring wheat. This is your spring wheat chart, just going back to June and the slide that we've seen. We do have quite a number of days that are green here. Whether we wanted to go long on that would be the question. All these other, your Kansas has actually got the nice uptrend here. So does the Chicago, and so does the milling wheat. So we've got it looks like a good base if all of these other crops are coming off. One of the statements I've made with a few clients that I talked to yesterday, European milling wheat is primarily a winter seeded crop. So is Chicago, and so is the Kansas, which we're taking some direction from. They are ready and starting to plant right now. And all indications are, with these prices where they are, it's going to be very difficult for a farmer to put more seed than expected from the last year to get planted. I would expect that there's going to be less planting. So this post-harvest rally is basically a rally to encourage some planting. Should take advantage of it with some long options, I think. Corn futures, nice uptrend still. Still upside target is to get some more sales made in that circle there for sure. Live cattle futures basically chopping sideways, but a little bit of an uptrend after it had its big drop last week. Same thing with the feeder cattle. Here's an article about the Beijing is urging top hog producers to cut output. There's just a glut of pork in their country, and it hasn't really reflected in the North America market as of yet, because I think that the slowdown of pork going in there is definitely almost stopped. And that's all I have for you today.